Hi, this is Mike Ryan with M&D Real Estate Solutions, and we're going to be doing this quick video to show you how we're buying defaulted bank notes or turning upside down residential properties and commercial properties upright. A little bit real quick about me. We started real estate in 2005 through getting my real estate license. In 2006, I started my investing education, and over the years, we have successfully acquired, bought, and sold all kinds of real estate. Just a few examples of some of the deals we did. We did the short sale here in Wildwood for bought it for $270,000, sold it for $336 to make a gross profit of $66,000. Here's one we did, another one in Wildwood, $310,000 purchase price, sold it for $389 for a gross profit of $79,000. And here's in one in Woodstown that we bought for $145, sold it for $173, gross profit of $27,000. Now, I don't know if you've been investing in real estate, but if you have, what have you been investing in? Well, obviously, you're going to do residential or commercial. You could be doing short sales, RIOs, or bank-owned properties, fixer-uppers, whether that's probate, inheritance properties, maybe the short sales or the bank-owned homes, subject to purchasing wraps. Now, we've done all of those. And what I'm going to do is show you why notes are smarter, faster, and more profitable than traditional real estate investing. You saw that I did some short sales there. Well, what happened to those? Well, these no flip rules came into play and title seasoning. Now, there's still legitimate ways around those issues if you know how to do it, but there's also a time frame. The longest we had was 25 months. You don't profit from all of them. Some of them you spend a lot of time on, a lot of waste, and then nothing good happens out of it. You just wasted a lot of people's time. And well, they can still be done, but why bother? Now, whatever you're investing in, whether it's short sales and RIOs or traditional, just regular real estate investing, you have to do a certain amount of marketing. You have to find these deals, which leads to, not in every situation, but certainly there's drama with homeowners and real estate agents involved. If you're dealing with the banks, you have to get to the right department. There's negotiations, whether that's with a homeowner, an agent, or a bank. There's a time frame involved, sometimes a very long one. Short sales and RIO flips are tough, although there are some that's their niche in the market and they do very well with it. There's title and seasoning issues, and financing is tough for end buyers. You need cash buyers for a lot of these deals. So the old way of investing that we were doing was, hey, we had to go out and find the homeowners. Well, that costs money. Then we had to negotiate with them, or we had to negotiate with the bank. And then we had to find a buyer and hope that they were actually going to be able to close. Well, now what we're doing is we're finding a note for sale, buying the note, and then we're making money. This is a no headache way of investing. There's no postcards or letters, very little competition, no dramatic homeowners, there's very little paperwork, no overwhelmed loss mitigators. We get a yes or no answer in days, not weeks or months, and we close in 30 days or less. Now, are banks really letting notes go? Can you really get these notes? The answer is yes. And then also, can it really be that easy? Well, yeah, it actually is. We get lists of non performing notes on residential and commercial properties all over the United States with multiple exit strategies available on each one of them. Well, the question could be asked, okay, well, why would a bank sell? Well, major banks are actually required to get rid of these non-performing loans for FDIC compliance. You see, the short version of the story is they have certain ratios that they have to maintain, good debt to bad debt. If they're making bad lending decisions and their ratios fall below a certain threshold, the FDIC can come in and close them down. And that's happened to hundreds of banks across the country. So they're motivated to get rid of these assets. They're just not set up to be able to do the things that we can do. Now, big banks are going to sell big pools to big funds. So your Bank of Americas, they're going to sell them to funds that are buying billions of dollars worth. But there are funds that are a bridge between the Wall Street sellers and Main Street buyers. And we purchase our loans direct from lenders, hedge funds, and other vendors that we form business relationships with. Well, okay, well, what are banks selling, Mike? Well, they're selling everything: single family homes, condos, townhouses, apartments, self storage, hotels, motels, mobile home parks, medical, industrial, mixed use, all over the United States. Okay, why are we going to buy distressed mortgages? Well, because we can get a great discount on them. Many of these, depending on where we're buying them, we're getting between 25 to 50% or more of a discount off of the current property value of that note that we're buying. The investment strategy, we can have short-term gains. We can just flip the notes, not flip the houses. We can have long-term cash flow. We can make non-performing loans reperform, collect cash flow off of them. There's a variety of other things we can do. We'll go over in a couple minutes. There's just a different mindset. The property owners have more invested than tenants do. So when we're dealing with property owners rather than tenants, they're more motivated. Many are desperate to save their home and they're willing to make a deal in order to do it. We have professional vendor networks nationwide. Now, what are some main investor concerns? Okay, well, is there any delay in foreclosure or loan paperwork problems? Well, part of what we do is we ensure the paperwork's correct when we get the loan so that we can foreclose if necessary. We're not going to wait to start that foreclosure process. We're going to start it if we think it's needed early in the game. We also will do these deals throughout the country, although we'll focus in on some of the states that have foreclosure laws that are a little easier for us to deal with. Now, some of the things that we have to deal with, well, we're not going to be able to get inside a property to assess its condition, which is really no different than buying at courthouse steps or a tax auction. Um, Owner occupied, we have higher value deals, there's minimal risk. We know that someone's living in there, they're going to be motivated. Most likely, if there's living in there, the plumbing's working, the pipes are still there. They're taking care of it to a certain extent. But lower priced and vacant houses offer another great avenue because we know that they already threw in the towel. All we really have to do is find them, and they're probably going to be able to just deed the property over to us. We're going to sometimes get them for bigger discounts, and you're going to see an example of that in the end here. Now, another question is, well, if the borrower's not paying the bank, well, why are they going to cooperate with me? Many are actually willing to pay, but the big banks just aren't flexible enough to help them do it, or they just have way too much paperwork involved. I can't tell you how many homeowners said, well, I lost my job 2 years ago and I fell behind on my payments, but I'm working again. I want to pay, but the bank just won't let me. That's an easy one. Okay, start paying us. Here's where you're going to send it to, right? Make that perform again. Make it into a good loan. What are we going to get from the note seller? Well, they're going to give us the property address, property type, borrower's name, BPO value, that's broker price opinion, and the date that it was done, so we know about what that property should be worth, what the payment history is, payment amount, many times the foreclosure process. Now, we're not going to get rent rolls or an operating statements usually. We're going to have to do pro forma if it's a commercial deal. Now, what type of due diligence do we do? How do we check these out? Well, we have to check the initial value, either through real estate agents, preferably, or through websites. We need to figure out what that's worth right now. We want to know what the past taxes are that are due. Has it gone for tax sale yet? Check the title or owners and encumbrances report. Is there anything on there that we're going to be concerned about? We want to do a drive-by to make sure that there's still a house there. It's not a vacant lot. And we want to get the valuation, the BPO. What's the process like? Well, we submit a letter of intent, or sometimes it's just an email. Hey, I'll buy this for X amount of dollars. Again, we're purchasing most of these notes for 50% or less of current market value. They're not usually going to require an earnest money on these note sales. It's just, hey, this is where you're going to wire the funds to. This is the day it's due. We do need cash to close these. We're not going to be taking out a mortgage to buy a mortgage. We have to fund these with cash. Usually 1 week for due diligence or faster to close. We can also get longer periods if it's a larger pool that we're buying. Well, what are some of the exit strategies? In other words, how are we going to actually make money here? Well, we can flip the note. We can wholesale it. We can option a note, same way you would option a house. We can buy the note and then approve the short sale. We can buy the note and then flip or hold on to the property, whether we foreclose on it and sell it as a REO or foreclose on it and hold it as a rental. Get a deed in lieu of foreclosure from the property owner and let them walk with no foreclosure, bankruptcy, or deficiency. We can modify the loan to have it create cash flow for us and then either hold it for the cash flow or we can sell it later for more money and cash out of it that way. Just so many ways that we can create income through notes. Well, how's it work? Well, we find the loans, we purchase them at a discount. Our servicing company contacts the owner. We execute one of those exit strategies. We have the closing or the modification. We collect our payments and we do it all over again. Here's a few examples that either myself or some associates that I'm closely working with have done. Here's a 7-unit San Diego apartment complex that was worth $700,000. Was put under contract to purchase the note for $375,000 and wholesale to another note investor at $410,000 for a $35,000 profit. Now, what did that note investor do? Well, they took a deed in lieu from the property owner, marketed for sale as a bank owned, and sold it 4 months later for a $138,000 profit. Here's an ugly house. $130,000 first lien that hasn't been paid for 18 months. The after repair value for this house was $110,000 and it needed about $30,000 in repairs. Now, any investor would be happy to pay $47,000 for that house. That's a good deal. Well, this note was obtained for $3,750. Deed in lieu was obtained from the property owner. It was listed as a bank owned and sold 30 days later to a cash buyer for $25,000. $25,000. That's a $17,150 profit. Now that cash buyer that bought that for 25 grand, he got a killer deal. But hey, this wasn't too bad of a note deal either, was it? This was done without ever walking a property, swinging a hammer, collecting rent, or having to show up at closing. You make money by holding on to a note. Here's a condo in Charlotte, North Carolina, that was worth $50,000, and the note was obtained for $17,500. There was a loan modification done, which is yielding a 22% monthly return on that. Gloucester, New Jersey, house worth about $25,000 on a $58,000 loan, bought for $3,400 and in the process of obtaining a deed in lieu. Camden, New Jersey, bought it for $1,000, $81,000 loan, house worth less than a tax lien amount and currently obtaining a judgment and lien for collection. You see, we can create win-wins for property owners. We can offer them a deed in lieu with no deficiency judgments, no new late pays on their credit, no foreclosure on their credit. Sometimes we can give cash for keys and say, hey, here's a little bit of money to get you moving on. No promissory notes. In other words, they don't have to sign a note saying that they're going to give us the difference for what we sort of lose, but because we're buying these at a discount. We create a win for the banks. They get rid of the bad debt killing their books. They set on a fraction of the time, and banks hate RIOs. They hate their bank-owned properties. They're in the business of making money on performing loans, not non-performing. It's a win for us as investors. There's very little competition, awesome deals, very little overhead, closed residential and commercial deals nationwide. What's your involvement? Why am I doing this video? Well, we do fund our own deals, but we can't fund all of them. We have literally thousands of these available all throughout the country. So we're not looking for loans. We're not looking for any type of securities. What we're looking for are joint venture partners who will partner up with us and provide the funds to purchase the loan. We negotiate the price. We do the due diligence. We obtain the loan. We work it out with the owner, make the profit, and we split those profits 50-50. Now, you may be retired, laid off, or even quit your job and say, I'd love to invest, Mike, but I just don't have any of the money. Well, maybe you have IRAs or CDs, savings, 401ks, pension plans, whole life insurance. There's a lot of vehicles that we can show you, if you don't already know how to do it, that you can make returns tax deferred or even tax free. You see, you're in control. We're just doing the work to provide you with a passive investment vehicle. Now, that's all I have. I appreciate you taking the time to look at this video. Here's my contact information. Again, my name is Mike Ryan with M&D Real Estate Solutions. My email address is mike@mdrealestatesolutions.com, and you can reach out to me at 856-861-6175. Again, I thank you for taking the time to look at this video. I look forward to talking to you soon and helping you get involved with the vehicle of creating income with real estate notes.